I just turned 63. And you get to my age, and it's not like I'm some wise old sage or anything like that, but you evaluate. And I've got less runway ahead of me than I've already traversed. And so I really want to spend the rest of my life pursuing quality and things I'm passionate about and not just working to work.
Welcome to the American Dream Builder and Investor podcast, where our vision is to inspire busy professionals, especially first and second generation immigrants and Americans, to explore the state of the American dream in 2022 and beyond. That is the Trinity of Freedom: time, financial, and geography freedom. I'm your host, Missy Liu, and I have achieved financial independence, and I'm helping many others to do the same. I started out with $5,000 and have really built wealth for my family along the process. Now, I am on a mission to help hundreds of thousands of people like me to do the same.
Hi there. Welcome to the American Dream Builder and Investor podcast, episode 20. Well, we'll have our friend Mark Shuler again on this episode. If you want to hear about his personal story, you have to check out the last episode. And on this episode, we'll focus a lot more on his planning as a passive investor, considering that he's closer to his retirement age and he has built a successful career as an architect and as a real estate investor. Can't wait to tune in with you. I know, Mark, you bring a lot of experiences and also the experience through multiple recessions as well. So let's talk about the goal setting part. You sounded very passionate on that topic, and it's very refreshing to hear that you have some new goals, very different goals set for yourself for the coming year. And what inspired those, and
Getting older.
how are you planning on approaching them?
I just turned 63. And you get to my age, and it's not like I'm some wise old sage or anything like that, but you evaluate. And I've got less runway ahead of me than I've already traversed. You know what I mean? And so I really want to spend the rest of my life pursuing quality and things I'm passionate about and not just working to work. I've already worked 40 years and I'm, by anybody's estimation, wildly successful. I'm one of the top residential guys in the state of Washington. 4 times been voted one of the top 10 architects in Seattle. 1 time been voted one of the top 100 in the country. Now, whether you believe any of these polls or not, and I tend not to, believe me, I don't, but it's flattering that I gained a smidgen of recognition. Mainly it's because I have a website. And the guys who put these polls together, they got to fill it with something. So they go on the internet and they find somebody. Well, here I am. But, you know, I've done 500 projects. And by anybody's metric, that's a lot of projects under my belt. And that's a lot of built work over the course of my career. I guess what I'm saying is I don't need to keep doing this. I've already done it. I've got to have enough income coming in to run my household. It costs me a certain amount of coin every month to run the house. So I do that. But just to do it, no longer makes sense to me. It is not something I am that passionate about anymore. It is something, I like interfacing with my clients and I like designing stuff. It's an interesting problem solve, but I don't want to just keep running around for the rest of my life solving problems and get to the end of my life. And it's like, oh my God, I didn't slow down and smell the roses.
Yeah, that's what my husband always encouraged me to do. So I understand. So how do you plan on getting there with your active investments?
Yeah. So I've sponsored a lot of deals, right? And your listeners may or may not understand kind of the deal, how deals are structured, but we sort of syndicate deals along a classic GP-LP structure. And so the short version is I've invested a lot of money in my own deals, which is on the LP side. So I'm developing cash flow to replace my architectural income. And I hope by the end of this year, I'll have all that in place where I can really taper off of architecture. I have a couple of deals underway right now that are really challenging, but I'll grind through them. And then I will be able to, I hope by the end of the year, seriously look at starting to slow it down. So, but you can do that, but it took me a long time. It took me years to build that up. And so you kind of reverse engineer the problem. It's like, okay, what kind of income do I need in retirement kind of figure up all those sources. And then how much money do I have to deploy at an 8% return in order to generate that kind of income? And just classic engineer style. I reversed engineered it about 5 years ago, and I've been pursuing that ever since. So I set a goal, and now I've accomplished it.
Yeah, definitely. For example, for $100,000 of passive cash flow at 8%, before just leaving off the cash flow, you would need to have $800,000 invested. So it's great you set that goal. And in terms of numbers, so what I'm hearing is you first have to get clear about what you want in life. In this case, you want quality in life. And the second thing is you nailed on the numbers. How much coin do you need to run your household?
And look, you need on average 70, 80% of your income in retirement that you earned in your working life. I mean, it's expensive to retire. So if you're a high wage earner, like I've been for a long time, you need a hell of a lot more than $80,000. And I live in a very expensive area. The cost of living in Seattle is really expensive. And so 80,000, you can't even rent an apartment in the city and live in Seattle. I mean, this is unfortunately over the last 10 years really become an unaffordable city for a lot of people. So I've had to set quite a bit more aside in order to achieve what I'm trying to do. So
Yeah, that's good to know. So since you're investing to your own deals, you're getting cash flows from it. Are you planning on hiring people to do the managing so you can be a little more hands off? Or
no, I don't. So I'm working with a group in Texas, and we built a large organization that does all the management in house. So I don't actively manage the project. I manage some construction.
Got it. Which
And
is
I'm
really
even getting
interesting.
tired of that. I don't want to do that anymore.
Got it. So the first step is in terms of goals, the first step is to get clear of what you want, the type
Right.
of life. The second one is to come up with a number. And what happens after that in the goal setting to help make it happen, especially
Yeah.
for them goal.
Yeah. So let's step back to the goal setting stage first, because there's a really interesting point that I figured out a while ago. Goals can be a lot of different things, but the impetus to set the goals for me, I just personalize it. I was able to distill it down to two things. One was I was pursuing a goal, and the other was a goal was pursuing me, but pushing me. So you're either running towards or running away.
Mm.
And for me, it was really important to understand why I was setting the goal in the first place, because it had to be an authentic goal of mine rather than me, the saying, wherever you go, there you are, So I had to be clear of why I was pursuing this goal. And I wanted to always make sure that I was pursuing that goal, because you can chase a lot of rabbit holes, chasing a lot of goals, and waste a lot of time. And so for me, time has been the critical commodity in my life. And I don't want to make any mistakes going forward in terms of stuff I pursue. So that's why I'm going through this big evaluation right now. It's like, okay, I've got 10 to 12 good years left in me. I want those to be really impactful quality years. So I got to be very, very clear about why I'm pursuing these goals. But I think you can do that at any stage of your life. The older you get a little meat on your bones, you gain a little wisdom, it becomes easier to understand why you're doing things. So that's the first thing I would suggest. Then goals themselves I'm sure can relate to this. They have an ironic way of absorbing you, they become all consuming.
Yes.
So life balance is a big thing. And it's great to have goals, but don't lose sight of the rest of your life, which I tend to do and I've always tended to do. It is candidly a sticking point in my relationship.
Yeah.
So I am working hard on that. And it's kind of like what you were saying with the immigrant experience. I mean, you don't know what you don't know until you get smacked in the face with it. And it's like, oh, wow. Okay. I really need to evaluate this. And so I am thinking hard and heavy on that right now. And really wanting to change kind of my goal setting routine, not just setting goals to set goals, but making the rest of my life a priority, I guess. And that's like my grandkids, my relationship, my family. And if you're a high performing professional for a lot of years, walking away from that, it's hard. It's the hardest thing I've ever had to do, is to pivot away from a career where I've been doing what I've been doing since I was 6 years old. I am an idiot savant. I was a kid that was always going to be an architect. And so you might as well just cut my left hand off telling me I can't practice architecture anymore. It's that hard for me to walk away from this. But the rest of my life has come knocking. And it is something that it's taken me a few years, but I really realize I've got to do this if I'm ever going to be happy.
Mm-hmm.
And, money's great. I have news for you. Money's not everything. It is not. We all feel like we need that security blanket in life. You can exist on a lot less money than you think. And so
it's very true. Yeah, very, very true. So kind of what I'm hearing from you is really understand your why behind the goals you're setting.
oh yeah.
Ask one exercise I have done. It's the Tony Robbins 7 why. Ask your why. Like, I want to have $1 million. Why do you want to have $1 million? So I can do this. Why do you want to do this? Ask that 7 times.
Right.
So you can get to like the core. And then the next part is to figure out your priorities and non-negotiables. That's what my husband tried to help me think. Because I think we're similar in that we're type A personality, like go all in and like everything else is falling apart.
I am A plus plus plus.
So you're on the other extreme.
Yeah. So
it's important to set boundaries.
Yeah.
Yeah. So I think you get.
Let me give you a little example to let your listeners gain a little insight of how OCD I am. So we all put on a few pandemic pounds, right? It's just inevitable. I ballooned up to 170 pounds, the heaviest I'd ever been in my life.
But you're very tall.
Well, yeah, but that was 1 year ago. And I just made a decision. It's like, okay, got to lose those pounds, got to get back in shape, got to get my BMI down. So I hired a trainer, been going to the gym routinely, cut sugar, wheat, red meat, and most alcohol out of my diet. I dropped 19 pounds in 1 year, and I got my body fat percentage down to 15%. I just measured it 2 days.
That's impressive.
And I just through a sheer force of will, I got there. Mm-hmm. So, but that's that choice thing, Missy. I just like to lock onto a goal. I decided early on to do it, and then I locked onto it and I pursued it. So I am more disciplined than most people, I admit.
Yeah. So you have gone through an interesting path. We talked about goal setting, and now you're getting closer to your complete retirement, even though, you have this strong desire to hold on to it.
Guys like me never retire.
Yeah, you find another hobby. That's what happens after. You like building. So, but what you have gone through is a very interesting journey, further away from retirement, building the nest egg, kind of rebuilding the nest egg, and then getting closer to retirement. How has your investing strategy as a passive investor changed throughout? I think you invest mostly with yourself, but perhaps you also invest with other people. How have you looked at things differently as a passive investor into especially real estate syndication purchases, those type of group investments?
Yeah, that's a great question. So when you first start out in your real estate career, you're just trying to get that ball rolling, and it feels like no matter what you do, you're just pushing on this ball and you don't feel like you're getting anywhere. And then all of a sudden it starts snapping together for you, figure it out. And 5 years later, it's like, kind of got it figured out. I am just in the stage now where I'm migrating past that and your whole mentality shifts. It's like, I built this nest egg up. I've now got to protect it. So I am going into a risk-averse risk mitigation phase of my life where I'm in a wealth preservation phase. I'm entering that.
Gotcha. Lower risk. Yeah.
So like I have sponsored a lot of my own deals. I'm doing one right now and it's going to be the last one I do. I've made that decision. I'm never doing this again.
This podcast is sponsored by Life Mission Capital, founded by me, Missy Liu, where my life mission is to help busy professionals invest well so they can focus on what matters. All my life, I was taught to study and work hard for my freedom. Until one day, I realized that unless I let my money work hard for me, I will always be trading my most precious resource, time, for freedom. Since then, we have also been helping our investors passively diversify into more than 1,000 units of recession and inflation-resistant alternative investments, such as multifamily, mobile home parks, short-term rentals, and more. Learn more with our free ebooks at lifemissioncapital.com.
It
too
takes a
time
few
consuming.
years for it to mature because if you keep sponsoring, then like take another few years for you to retire.
Right. And I don't need the risk. I mean, I do big value add deals. So that's a riskier deal type. And there's a lot more moving parts. You have to be very, very experienced to undertake these things. I mean, I've done several value add deals where I spent 30,000 a door.
Yeah,
You know,
I remember you
rehab.
telling me those in Houston. And
Yeah. It's a lot of stress and a lot of distraction for me. And I just don't want that in my life anymore. So
Mhm.
I'll be raising capital for deals and I'll be investing in my own deals, but I'm never going to sponsor another deal. People say never. I'm saying never, never going to happen.
Yeah. And what you're bringing up is an important thing for people, whether they're passive or active investors, to understand. By active investors, it is a higher responsibility, especially when you're a sponsor, taking on a higher risk to sign your names on the loan, managing the day-to-day operations,
Oh
liability,
yeah.
on so many aspects. And that's why you love passive investing, and I do too, because it's not really my passion to be managing the contractors and seeing some like, oh, sewers got backed up, like this 1970 property is not working as well as we thought it would. And
Been
so,
there, been
so
there.
yeah, the foundation issues, like anything you think can go wrong, sometimes it just goes wrong.
And look, none of those problems are catastrophic necessarily to a guy like me. I know how to solve those problems. I just don't want to do it anymore.
Yeah, it's more about additional things to do because you have to deal with them. So that's why you made the decision to be sponsoring your last deal and then moving more into helping people invest in quality opportunities that you would personally invest yourself. So,
Yeah. Yeah.
so what would you be looking at in terms of investment criterias, especially in the step market, even though we hear the
Now,
rate are leveling off, but still a lot of moving pieces in the economy as of January 2023.
yeah. So a lot of people, they make the mistake of looking only at the deal, the quote unquote opportunity. And to me, these OMs that I get, people ask me to invest with them. I don't believe any of them. What I look at is the sponsor. How experienced is this sponsor? How old is this sponsor? How many deal cycles have they gone full cycle on? Have they done value add? What is the type of deal that they are proposing? Is it core plus, value add, opportunistic? Are they doing multifamily, office, retail, medical office? I was talking to somebody yesterday. He's into warehouses. Who knew? I mean, I've known about warehouses for a long, long time. I've just never taken the time to explore the opportunity. It's a really pretty fascinating line of work. But, I've been a housing guy my whole life. I wrote my essay to architecture school 40 years ago about affordable housing. So now I'm an affordable housing developer. So that's just kind of been my guardrails. I just stayed in my lane and done my thing. But if you're thinking about investing in a deal, I mean, you have to evaluate not only the opportunity, but the person who's proposing the opportunity. And to me, the more important criteria is the horsepower of the sponsor. My fear, I don't know if fear is the right word, but my hunch is not many people seriously evaluate the sponsors of these deals.
Mm-hmm.
And they maybe haven't invested in real estate enough to kind of look for other opportunities that are out there. Do I pick door A, door B, or door C?
Mm-hmm.
There are deals out there, hundreds of deals at any given moment in the marketplace. You don't have to take the first one you find. So what I think, if I was to impart some wisdom here as a passive investor in a deal, I'd learn how to evaluate sponsors first and then their deals second.
Mm-hmm.
Don't skip over the sponsorship evaluation phase, which I think a lot of people do.
Yeah, definitely look at the jockey before the horse.
Yes. Yeah,
Important.
good analogy.
Yes, and I can relate to this because on my website I also have an ebook on like 110 questions to ask before you passively invest. But 110 questions is a lot, and you don't want to ask sponsor those questions either. And based on your experiences interacting with other sponsors or people asking you questions, what do you think are the top 1 or 2 questions that typically people don't think about or don't think has value add, but it's actually like, well, that has really helped you in your passive investing journey?
All right. Well, first of all, how many deals have they gone full cycle? All right. Have they gone front to finish and sold a deal for a profit that was successful? The second question, are they doing all the work in-house, the asset management, the construction, or are they shopping that out third party? If they're putting it out third party, well, there's a cost associated with that third party relationship. Those third parties have to make a profit. So the real question to ask is, are you vertically integrated? Do you have all that horsepower in-house, or are you shopping it out? If someone is shopping it out and telling you that it's a 20 IRR deal, I'd probably run away from it. You can't do it. I know the numbers. I know how it works. I know what it costs to hire third-party agencies to put a deal together for you. There's just no way. Then you can get into some of the weeds on the underwriting. One of the big ones that a lot of sponsors, especially newer sponsors, cheat on is this thing called the exit cap rate. And real estate assets are basic. The math is really simple. It's a net operating income divided by the cap rate. The cap rate's a function of the asset type and its location. So housing, for instance, multifamily housing, generally around a 5 cap wherever you go in the country. What's really important is what was the going in cap rate and what are they programming in their profit projections on that exit cap? And it used to be being like 2 years ago, a lot of sponsors were saying, oh, well, the market's still heading, in a direction where that cap rate going out is going to be lower than coming in. I can tell you, I've never underwritten a deal where the cap rate was lower exiting than going in. It is stupid to bank on that. And what you're doing is you're pumping the numbers. You are artificially inflating the value of that asset when you shouldn't be, and increasing the IRR and making it look like more attractive investment on paper than it really is.
Mm-hmm. Yeah.
And you just have to know that. But that's a basic question that any passive investor can ask. What's your entry cap? What's your exit cap?
Mm-hmm.
I was talking to somebody today and he was evaluating a deal. And I asked him that question. He said, well, it's only 400 basis points or something like that. It's like, that's impossible. Not in this environment. That doesn't happen anymore. That needs to be at least half a percentage point, if not 3/4 to a full point. That's the environment we're in right now.
Yeah,
So,
that is true. You make money when you buy. That's the ideal scenario. So,
yeah.
And then have a good assumption going out. That's part of the risk management piece. One of the reasons we love real estate is because you can calculate this, make assumptions a lot easier than compared to stocks and et cetera. So
Yeah, but you can also put garbage in and garbage out. So you got to be careful.
Yeah, definitely the entry and exit cap is a good point to bring up about what's happening in the market now and what you think you can project to sell in the cap rate.
Right. But there's also rent projections. How did you arrive at your rent projections? Is this a sort of just a core asset, maybe A class deal or a B plus, where the rent growth is going to be steady Eddie and you're just going to get a pretty nice dividend off of it, but you're not going to realize a lot of profit? Or is it more opportunistic where you're trying to kind of do a deep value add and really raise those rents and increase the net operating income and have a really nice profit at the back end? Mm-hmm. That's all contingent on rent projections. How did you arrive at your rent projections? I know when I underwrite a deal and look at rents, I'm doing an exhaustive survey of the marketplace around me. We're secret shopping properties. We're sending people on our staff to go in and pose as renters, find out what the kind of the rents are. And we're tabulating all of that in a big Excel spreadsheet and then coming up with what we think is a middle ground on our rent projections. And if we aim low and they're higher, okay, we're heroes. But if we aim high and they're lower, we're chumps. So got to be very careful about that. So those rent projections and the exit cap relative to the entry cap are probably the two biggest thing I see sponsors cheating on.
Yeah, because they carry the biggest weight. You have the revenue, the rent can make the most changes, and then the cap as well. And I think you nailed on the cost in terms of numbers, how the numbers affect each other. Yeah. So as we come to the end of the recording, Mark, I know you've shared your personal story of rebuild to NASDAQ and how you'll have also had the breakthrough limiting beliefs, but also worked hard throughout, and how you're switching your focus into passive investing. Letting go can be a good thing and can be a beautiful thing because it allows you to focus on what matters for you. Is there any anything else you'd like to share with the audience today before we end the call and leave your information?
Yeah, this is a really interesting industry, and it is not for everybody. The irony about real estate, done correctly, you can really mitigate risk. And so as an active deal sponsor, I have a fiduciary responsibility to all my investors to minimize the risk that they undertake. Done correctly, there's less risk and less volatility than the stock market. Stock market is subject to what I call the butterfly effect. If butterfly flaps its wings in Australia, what does it do to my deal in Texas? Or the stock market, for instance, can have a huge effect. Flutters the wrong way, right? Who would have thought that COVID would have had such a worldwide impact to supply chain and inflation and all this stimulus money that got pumped into these economies? And we're paying the price for all of that right now. And not to be pointing any fingers in here, but it all traced back to a wet market in Wuhan, China, and who would have thought that so much havoc would have been wreaked on the entire global economy by a wet market? I wouldn't have guessed that. How do you predict that kind of event? But that's one of those, I call it the butterfly effect, but there's another name for it. One of those, one-time outlier kind of
Black swan event.
Black swan event. That's what I was thinking of. Yeah.
Mm-hmm.
So did that have an impact on me in my real estate world? Temporarily, but we bounced right back. I guess what I'm saying is real estate can be a little unhinged from the global macroeconomic economy. We all have to have a place to live. And you could drop a pin anywhere in this country right now, and there's a housing shortage. So from a macroeconomic point of view, there's a supply and demand imbalance going on. Now, that may not always be the case, but I'm a building professional. I can tell you, we're 8 million units of housing behind schedule in this country. And it took us 13 years to get here.
Yeah.
Had 3 major economic meltdowns in the last 13 years, and housing production's been taken offline for 6 years. So we are not crawling out of this hole anytime soon, which as a real estate guy, makes me feel good all over, because that means there's always going to be more demand than there is supply.
Mm-hmm.
So I'm always going to be sitting at, 92 in certain markets and 98% occupied in other markets, which is full occupancy, and I'm going to be able to pay my dividends, So done correctly, it's a less risky proposition than the stock market. That's why I like it. It's also something that I can distill the variables that go into it down to very few, and I can understand it. Whereas the stock market, I can't understand. It's just gotten too close. You've got PhDs in mathematics from MIT programming these computers to do these instantaneous trades on the stock market. How do I an investing strategy competing with those guys and their supercomputers, So
I agree.
So your average investor, they may perceive real estate as riskier than the stock market. I'm here to tell you it's less risky, done correctly. But you have to vet who you do business with. You are joining yourself at the hip with a sponsor. Too many people don't really vet the sponsors. So if you do your homework, they should be fine.
Yeah, definitely agree. That's what I love about real estate investing and being in the analytics background and distilling the variables, just like you said. So what is the best way for the listeners to get in contact with you, Mark?
Oh, yeah. Well, you can hit me up. That email address right above my head. It's either Mark at SGRE Investments or info at SGRE Investments. You can go to my website, sgreinvestments.com. And I'm sure there's an email link there. I need to talk to my IT guy about that. But I'm always in front of this box. So hit me up with an email and I generally respond within 2 or 3 minutes. So.
Awesome. Well, thank you so much, Mark, for your time today and sharing your wisdom and your life story with the American
my pleasure.
and investor.
Thank you so much for tuning in to the American Dream Builder and Investor podcast with me, Missy Liu. We hope you enjoy the tips and tricks that others have used to build their American dream and their trinity of freedom. We would love for you to subscribe and leave a rating and a review. You can also find all the episodes and details on lifemissioncapital.com. Until then, let your life mission go wild.